While Russia searches the globe for customers for its energy products, it encounters eager trading partners in unforeseen locations. Since Western sanctions over Ukraine's crisis cut Russia apart from many of its usual economic partners, Saudi Arabia and the United Arab Emirates have stepped in to take advantage of Russian product discounts. This is how Saudi Arabia and the United Arab Emirates, UAE, saved Russia, banning oil transport to the United States, US. Research has it that the Gulf nations are using discounted Russian products internally, including for consumption, refining, and exporting their own barrels at market rates, enhancing earnings. The Gulf countries, mainly the UAE, have also become significant storage and trade hubs for Russian energy products, which cannot be delivered as readily around the world due to the war. The UAE has become an essential component storage and re-export hub for Russian energy products, while other traders are performing well transporting cargo from Moscow to other destinations using the Gulf nation and its financial system as a base. Private trade companies, according to Mr. Eliev, transport products from Russia to the UAE, mostly for re-export to Pakistan, Sri Lanka, or East Africa. State-run businesses in the emirate are buying some of Russia's reduced oil cargoes, including 5 cargoes of gasoline, to the Emirates National Oil Company in Dubai since December 2022. Capillary figures show that a shipment of 700,000 barrels of Arctic crude oil was brought to Abu Dhabi National Oil Company refinery, run by the emirate in November by the giant Russian government ship, Gazprom PJSC. Owing to the political significance of doing business with Russia, specific transactions appear to be discreet in order to evade the close monitoring of participating financial institutions and insurers. More interesting details about Saudi Arabia and UAE saving Russia oil transportation to US discloses that oil cargoes that were originally sold by Rosneft Oil Company are frequently acquired by Aramco. The supplies were made through transshipments in the Mediterranean by a Russian oil company, whose trading arm is under sanctions from the United States. The countries retaining some of the largest oil reserves are now importing Russian diesel and fuel oil, according to Tanker Tracking and Data Commodity Services, since the Western countries announced they would impose embargoes and price caps on Russia's crude oil. Saudi Arabia and UAE saved Russia, banning oil transport to the US. Now, when compared to the previous year, Russia's oil exports to the UAE in 2022 tripled to an unprecedented 60 million barrels. In accordance with estimates from Argus Media, the amount of Russian oil products that are being imported into Fujairah, the largest commercial hub in the United Arab Emirates, which is only second to the imports of gas oil from Saudi Arabia. Russian fuel exports to Saudi Arabia, one of the largest suppliers of crude oil globally, and the de facto head of OPEC, commenced earlier this year. In the OPEC Plus alliance, which has been coordinating the supply of crude oil to the market for more than 6 years, Saudi Arabia and Russia are also at the top of the list of OPEC and non-OPEC producers. Notwithstanding the EU's enforcement of restriction on seaborne imports of Russian oil products on February 5, 2023, Reuters reported earlier this year that Russia began supplying diesel to Saudi Arabia, using STS loadings to quote traders and ship tracking information due to the current EU petroleum export ban. Russia has consolidated the routes for tankers sailing to Africa and Asia. After the EU implemented a ban on imports of Russian refined oil products on February 5th, Seaborne had to find a new market for those products, approximately 1 million BPD of Russian diesel, naphtha, and other fuels. If the deal is carried out through Western insurers, Russian petroleum exporters are also subject to price limits similar to the cap on Russian crude. The restriction on Russian diesel is set at $100 per barrel, while the cap on cheaper petroleum products is set at $45. As Russia continues its oil reshuffle, some trading patterns are starting to take shape. Russia's top strategic commercial partners right now are China and India. Russian diesel exports increased by 33% in March, with shipments coming from the country's dark seaports to the eastern and western Mediterranean and territories that include Libya, Egypt, and Tunisia. Brazil has received virtually equal sum in exports via Baltic seaports in terms of percentage. Nevertheless, the increasing Russian gasoline deliveries to Saudi Arabia and the United Arab Emirates suggest the United States' influence among its major allies is shrinking. Due to a loophole in sanctions, the European Union remains the biggest importer of Russian oil. Despite being the company that has implemented the strongest sanctions against Moscow, the European Union is still the country that imports the most fossil fuel energy. The EU continues to acquire a record amount of crude products from the major consumers of Russian oil. The EU continues to acquire a record amount of crude products from the major consumers of Russian oil, which is why it is still the largest importer. The Center for Research on Electricity and Air Quality Careers discovered 5 laundromat exporters of Russian staff to the EU in its most recent study. The nations increase their imports and sell the refined goods to their Western counterparts, who have enacted sanctions in an effort to reduce the Kremlin's income, which encourages the invasion of Ukrainians. Even though the European Union currently legally imports Russian oil by changing the country of origin, the report pointed out that the EU still contributes to Vladimir Putin's war fund. The EU G7 countries in Australia have come together with the United States to impose some of the harshest penalties, including an embargo on the majority of oil exports to Europe and G7 price cap on Russian crude in order to combat Russian crude oil and oil products. It was discovered since the Russian invasion, the European Union and its G7 countries in Australia have brought in a total number of 42 billion euros in oil products from neighboring nations, and 7.7 billion euros worth of oil has been imported. On the other hand, restricting this trade offers a chance to use much-needed additional leverage and put an end to funding for Russia's invasion on Ukraine. The issue further emphasizes the European Union's and G7's lack of effort in reducing oil demand and their continued reliance on oil. The U.S. showcased that the 5 Asian and Middle Eastern nations improved their imports of Russian crude oil by more than 140% in volume and by 74.8 billion euros in total value from the year prior to the war. Their exports to the West were increasing in terms of volume as well as value by 26% and 80% respectively. The price limit coalition's countries were importing more refined oil from China, India, Turkey, the UAE, and Singapore, while decreasing the amount they purchased from China by 92%, 43%, 23%, and 2% respectively. Why do Saudi Arabia and Russia depend on each other? In order to finance its imports and offset remittance outflows, Saudi Arabia only needs prices of $50 to $55 per barrel. Yet in order to balance the budget, a higher price of $75 to $80 per barrel is needed, and even that doesn't tell the entire story. Click on the subscribe button if you are finding this video interesting. The vast majority of Saudis find jobs in non-oil industries, so the government must invest in them in order to fulfill its end of the bargain. However, Petrodollars covers these expenses. In addition to its investments abroad, Saudi Arabia's sovereign wealth fund plans to invest $40 billion annually in the local economy, including building a futuristic city in the desert that will likely cost approximately $500 billion. The kingdom requires an oil price closer to $100 in order to deliver on all of these ambitions. In the meantime, President Putin in Russia continues to depend on revenues from petroleum to power his war machine. The newest round of output cuts has been met with the White House's ambivalence. This might be in part due to assumptions that the real output decrease might be less than the headline figure of over 1 million barrels per day. Still, economists' projections for oil prices this year and next are still in the range of $85 to $90 a barrel on average. What if OPEC Plus decides to reduce output again the year before the U.S. presidential elections, undermining Joe Biden's potential chances of winning? What is your thought about Saudi Arabia and the UAE oil transport in Russia? Want to know more about Putin? Just shut down all US and EU sanctions against Russia, collapsing the U.S. economy. Watch this video popping on the screen right now to learn more.